All right, guys, due to inflation going on in the country right now, a lot of people has been asking me, hey, Wale, what do you think? What is going on with inflation? Should we be investing in real estate? Should I buy my house? So a lot of those questions, I want to just quickly answer that here with 6 reasons why real estate beats inflation all day, every day. Number 1 is leverage. You're borrowing money at a cheaper dollar. So you're leveraging on the bank money. For example, if you're buying a house of $500,000, and you're borrowing 10%, you're putting down 10%. So you're borrowing 90% of that money. So $500,000 is the purchase price of the house. You're putting down 10%, which is $50,000. And now you're borrowing $450,000. So let's say 1 year down the line, the house has appreciated for 10%. So now the house was $550,000, but you only put down 10%, meaning that your capital is $50,000. But now you have your capital of $50,000 plus the appreciated amount of $50,000. Now you have $100,000 in that property, and you just bought that house, with only 10% of your own money. So that's leverage. And now interest rate is even as low as 2.5%. And if it's 2.5%, which inflation right now is 5.2%. So it's even cheaper to borrow money, and it's even more expensive for you not to do anything, not to borrow money to buy real estate. So 5.2% is the inflation rate at this time, and it could go up a little bit, it could come down a little bit. So if you borrow money, you're still in good shape. So that's leverage. And if you do this in stock, it will be a different experience. And don't quote me wrong, things can also go down a little bit, but it's not going to go down as far as 5.2% inflation rate. So most of the time, real estate will beat inflation, and that's one way. Number 2 is that low interest rates. You're borrowing money for cheaper dollars, and you're paying it back with a very cheap amount in the future. So what does that mean to you? It means that you borrow it at 2.5% right now. If interest rates should go back up to 4%, 4.5%, you're good, because you're already locking your rates at 2.5%. So you're borrowing money for cheap, and you're going to be paying back for cheap, regardless of whatever happened in the future. That's number 2. Number 3 is that the rent also always go up, because people are making more money, and because money worth less than what it is right now. So if your tenant is paying $1,500, for example, I can guarantee you by next year, next 2 years, it's not going to be the same $1,500, except you're not doing the right thing. So rent go up, which makes you more money, and whatever the inflation is doing, you already have a cash flow from that property. So number 4 is that your expenses and mortgage payments remain the same. I mentioned this briefly. So your mortgage payment, your expenses remain the same. There might be 1 or 2 changes like HOA, your property taxes, but these are very insignificant compared to the appreciation you can get when you buy real estate. Also, number 5 is cash out or refinance. You can cash out the equity you have in that property and use that money to do something else you want to do, or even use it to buy more real estate. So, which is what I like to do. So that's number 5 edge against inflation that real estate has to offer. And number 6 is the loan pay down. Like I said, the interest rate is 2.5% for an average person, and inflation rate is 5.2%. So that is almost doubling the interest rate. So what does this mean to you? It means that every month that you're paying down your mortgage, you're having more money in your reserve, and you are beating the inflation, because inflation is higher than what you actually borrow. So, and what does inflation even mean in a very simple time? It means that money are actually worth less. They're worth less than what they can do. Put it in a simple term. Your sandwich, if you go to Walmart or Subway, you can buy 4 sandwich for $1, right? But at this time, you can only buy 3 for $1. So it means that, I can't actually eat 4 sandwich for the same amount again. If you want same 4 sandwich, you need to pay maybe $1.25, $1.25. So what does that mean to you? It means that the money are actually losing their value. Keeping the money in the bank, putting it in a CD, even putting it in an IRA, you're probably losing money every day because of inflation. So you want to put your money to work and put it into real estate, because it has a lot of edges against inflation. The last one is HELOC. HELOC means equity line of credit. You can do HELOC, it simply means you have money in the property, you cash out the money, or you borrow the money using your property as a collateral, and they give you that money. You can use it for whatever you like. So this is just a quick 6 edge against inflation that real estate has to offer. If you want to learn more about it, give me a call or reach out to me on Instagram. I will be able to help you in any way I can. I hope you find value in this. If you find value, please make sure to like it and share it with anybody you think it will benefit. I will see you on the next one. Bye-bye.